Our next AIM and NYSE listed company is Caledonia Mining Corporation, who holds 64% of the Blanket gold mine in Zimbabwe. And they also have 2 exploration projects in the country. After 5 years and $67 million, Caledonia has successfully completed a new 1,200 metre shaft, which is now in operation. Numbers announced today, Q3 numbers today, show that gold production hit a new high this quarter with a target of 67,000 ounces for 2021 and a new target of 80,000 ounces by 2022. CMCL pay a rising quarterly dividend, which is now 13 cents a share. The news boosted the share price up 6% today, and that pushed the market cap up to £117 million. Mark Learmonth, the Chief Financial Officer, is joining us from London tonight. Welcome, Mark.
Good, thank you, Donald. Well, let me just quickly run through this. There's the disclaimer. So we've really got our strategies focused on four bases. The central shaft, which is this project that we've been building now for 7 years or so, and we've just finished, and that really gives you near-term, low-risk growth, which will drive a significant increase in production. So in 2020, we did about 58,000 ounces, as Donald's already said. This year, we're looking at sort of in the mid-60s, and from 2022 onwards, about 80,000 ounces. So, I mean, that's baked in. We've got the infrastructure, we've got the resources. It's just a question of just linking it all together and making it work. Over the past 7 or 8 years or so, but increasingly, especially over the past 2 years, we've demonstrated a real commitment to return money to shareholders. We've consistently paid a quarterly dividend for many years now. And as Donald said this morning, we did our 6th dividend increase in the last 2 years. As well as the existing project in Zimbabwe, we're now beginning to look at new opportunities in Zimbabwe, for which we have the funds that we're generating, which we can then deploy some of that funds into these projects. So just by way of an overview, we're an established, profitable gold producer with an expanding production from what's called the Blanket mine, which is in Gwanda in the far south of Zimbabwe. In addition, we have two exploration option agreements over Gweru, over 2 properties in the Gweru area in the Midlands, and they've historically been very, very productive for gold. So we're cautiously optimistic about those. We're no longer. A lot of people still think that we're a Canadian company. We're not. We're domiciled in Jersey and the Channel Islands, which is important because it means that it's a tax-neutral jurisdiction, so we don't incur pesky Canadian taxes and English taxes, even though we've got no business in Canada or England. And in particular, it means our dividends don't incur withholding tax. We had healthy cash. We had about 16.3 million in cash at the end of April 2021, and we're on a P of about 7 times. Last year's revenue was about 100 million, and as I've said, our production guidance this year is between sort of 61 and 67,000 ounces. And you can see our historic and our forecast production in that bar chart on the right. We've got just under 1 million ounces of M&I resources, just less than 3.3 grams a ton, and inferred resources of about just less than 900,000 ounces. And we've always had a 100% conversion ratio from inferred to M&I. And it's fair to say that over the past sort of 3 or 4 years, because we've had logistical constraints at the mine, we've not been able to do further deep level exploration. So as soon as the central shaft is now operational, we'll be able to begin doing some more deep level exploration. We've got a 13-year life of mine. Here's the dividend chart. So we've been paying 6 and 7/8 cents per share per quarter for many years now, and then we started to increase it early in 2020. We would probably have increased it again in April 2020, but frankly, with the onset of COVID, even though it had no actual effect on the business, we just felt it inappropriate to increase the dividend at that time. And then thereafter, we've continued to increase the dividend at about 1 cent per quarter. I think that yield's probably out of date now. I think the yield's probably about 4%. Our share price, as you've seen, has come down a bit. But it's a reasonably healthy yield, and as you'll see, we have plenty of potential to continue to increase the dividend payments. This is our share price graph. Shot ahead in mid-2020 as we were included in the Russell 3000 index, which gave rise to some very exuberant buying, particularly in North America. And at that, when our share price hit I think it was a peak of about $27 a share, that implied a discount rate of 1%. our future cash flows, which is clearly overdoing it a bit for a single asset Zimbabwean producer. The share price has come down. It now seems to have settled at about $13 or just under £10 a share, and that reflects a discount rate of about 20% on our forecasts on our future cash flows, which again I think puts us into oversold territory. Management and directors have got about 4%. Most of that is myself and the chief executive. And Alan Gray is a very substantial South African institutional fund manager. They're our next biggest shareholder. Some of these other shareholders have actually recently moved off. So from there, some of these shareholders may have adjusted slightly as a result of the Russell 3000 rebalancing. But we've got a Liechtenstein-based private client investor, and Framiro, they're a local Zimbabwe local investor group. Even though we operate in Zimbabwe, which is challenging, we take our environmental, social and governance responsibilities very seriously indeed. So we've got a full suite of corporate governance ethics. We take health and safety extremely carefully. We work hard to empower our workers, uplift our workers, and they're also 10% shareholders in the business in Zimbabwe. We've got excellent relations with the community, which is often a problem for producing gold mines in Africa. The community owns 10% of the mine, and we're very proud of that. We believe that we adhere to very high environmental standards. Shortly, hopefully the next sort of few weeks, we'll be publishing our inaugural ESG report, which should hopefully will provide more context on all of those. COVID had no effect on production last year, but it did have a small effect on the capital project, the central shaft, and that's because the very small group of South African contractors at the mine, when Zimbabwe locked down in March, half of them decided to return back to South Africa. And actually, my feeling really is that it's the half who remained in Zimbabwe for an indeterminate period of time. I think they were the ones who probably wanted their heads looked at. But that did delay the progress on sinking the shaft, which had some knock-on effects. And also, because we were unable to send as many people underground as we would ordinarily have done, they had to focus on production, and they weren't able to do the development that was needed. So that meant that the central shaft was delayed by about 5 months, and so we commissioned it in late March instead of October as expected. We did procure and pay for vaccines for all of our workers at the mine and their families. So that's 1,600 workers plus wives. So that's about 3,500 people. We paid for them. They were delivered. The take-up was very disappointing. I think only about 220 people actually wanted to get the vaccines, and so they had to go somewhere else. The ones that were unused, we couldn't hold on to, and they had to go somewhere else. We are still trying to get our workers vaccinated. We're running a campaign to encourage them to do it. But now we're in a situation, having lost the vaccines that we procured, if people come forwards, they now have to wait for the deliveries coming into Zimbabwe, which is clearly very, very slow. But it's a disappointing outcome, but we did our best. We supported the community. This is a clinic that an isolation clinic that we constructed for the community. Cost about $460,000. The biggest operational issue we face in Zim is unstable and lack of power. So we suffer from power outages and also very, very substantial voltage surges. So we do have a full suite of standby diesel gensets, but they're somewhat expensive, although we can digest that. They clearly have an adverse environmental footprint, and logistically it is challenging getting large amounts of diesel at short notice. So we've just embarked on our first phase of a solar project, which will give us about 27% of our average daily usage. And that should be operational by the end of the first quarter, perhaps early quarter 2 next year. But that's a step in the right direction. And also whilst it ticks the green box, it saves us money. So it's good, and it's good in every respect. So this is a central shaft, which is the main thing we've been focusing on. So it's a 6 metre diameter, 4-compartment shaft, very similar to the sorts of things you would see in those big gold mines in South Africa. Commissioning was completed in the end of March, going down to 1,200 meters. And the idea is that this shaft will now give us access to ore below 750 meters, which was previously the lower limit of our mining operations. And that secures our mine life out to 2034. and also gives us the potential to do further deep level exploration. So we're optimistic that mine life can be extended further. We spent about $67 million on that since January 2015, all funded internally through our own cash flow. So as well as paying a dividend, we're also investing quite heavily to grow this. So this is a long section of the mining area. It's about 3 kilometers from left to right. We exploit a series of about half a dozen near vertical ore bodies. The dark line at 22 level, that's at 750 meters. That was the previous bottom of the mining operations. And you can see that all the gray stuff above it, those are the areas that have been worked out. So this mine's been running since 1907. So not surprisingly, it's now got a lot of voids. This was the infrastructure in green that we inherited when we bought the thing from Kinross. So it's a shaft that goes down the right-hand side and horizontal development in 3 directions. But you can see that's now largely giving access to areas where there's very limited resource. So the central shaft is what we put down the middle, down to 1,200 meters, and horizontal development in 2 directions on 3 levels, which opens up access to these deeper level ore bodies, as I've just outlined here. As I mentioned, we're looking at some new things in Zimbabwe. Zimbabwe is interesting in that it until the 80s it was Africa's 3rd largest gold producer, behind South Africa and Ghana. And since then, for obvious reasons, there's been very little, virtually no exploration in country. So it is highly prospective, and we're quite excited about some of the assets and some of the opportunities that exist there. So late last year, we acquired an option over a property called Connemara North. That gives us 18 months to go drilling. We paid about $300,000 for the option to get the option right, and then if we decided to exercise the option, it'd be a further $5 million payable in cash or shares and a 1% NSR. That was the Connemara North asset was previously a part of a package owned by First Quantum, which they sold in 2003. And at the moment, because there is quite a lot of existing geological data, we don't actually need to drill here right now. Drilling will probably start, I'd have thought, in the next few weeks. We've been able to keep ourselves busy for several months by evaluating the old information. And the second one is a property called Glen Hume, which is relatively close to Connemara. And again, similar structure, option arrangement. This time we have 15 months. The total consideration is about 5 million again, but this time it was split 50-50, 2.5 million up front and 2.5 million later on. And we're already drilling there. We take CSR seriously. We build our CSR on the pillars of education, health, agriculture, environment, and women and youth empowerment. But as I've mentioned, we'll be publishing our inaugural CSR report shortly, which will provide more information on that. So by way of outlook, we are looking at an increase in production to 80,000 ounces. That will significantly boost our cash flow, higher production, lower costs. We're targeting an all-in sustaining cost of somewhere between $700 and $800 an ounce, and clearly falling capex. Historically, we've been spending about $20 to $22 million a year. That will fall away quite quickly. So our free cash flow should increase very significantly. And what we'll do with that cash, we've been very clear. We intend to share some of that incremental cash flow with shareholders, and you can see we've demonstrated our commitment to that by increasing our dividend, but also keep some cash back to invest in new projects, particularly Glen Hume and Connemara North, but there's 2 others that we're also chasing. And actually, we'll look at stuff outside Zim as well if they're niche opportunities that we think where we can add value. And I think that's pretty much it. There is some old research available from WH Ireland in the UK, and we do owe WH Ireland we should get together with them and actually refresh that research report. We've been holding on for various bits of information, but I think we're in a position now where hopefully WH Ireland should be able to update that research note in the next few weeks. So I think that's all from me. I mean, I'm happy to take this over to questions.
Okay, Mark, that was very concise. Thank you very much indeed. What's your dividend policy? Let me start by saying you've just increased your dividend by for the 6th time. What's your dividend policy, and how do you expect to sustain it? And are you worried that with all the things that go on in the gold mining world that for some reason or other you won't be able to sustain it?
Well, the dividend policy is to pay a dividend. So which is simple. On the board, about a year or so ago, we took Nick Clark onto our board. He was previously the chief executive, is now the chairman of Camel, which I think some of you may be aware of. And he articulates this view very clearly. Camel had a dividend policy, which was whereby the payout was referenced to as a formula basis, and you had the ability to calculate. And so even though in terms of the Camel, even though in terms of the calculation, you could see that because the copper price fell, the dividend was going to fall, even though it was as plain as day what was going to happen. When the dividend fell in terms of the formula, there was wailing and shrieking from the rooftops. So our view is very much we want to keep the dividend. We never want to cut the dividend. We want to keep the dividend going up or keep it stable. We don't want to cut the dividend. Okay.
Is it popular with both retail and institutional holders?
Yeah, they're all the same. They're cool, all the same. Oh, sorry, you mean shrieking from the rooftops from institutional, or was that the question?
Well, yeah, I suppose it was. Is there a difference between retail and institutional holders? Do the institutions hold you for the dividend, for example?
Well, we have very few. We have very few institutional shareholders. So our only institutional shareholder of note is Alan Gray, who actually don't give a fig about the dividend. They're in there for the value uplift. So, but we know that retail investors do like the dividend. And look, I'm a shareholder too, and I like the dividend. So our approach is very much to be very cautious and very conservative in growing the dividend, so that we don't over distribute and put ourselves in a position where we might have to, for whatever reason, cut the dividend. And so let's put some numbers on the table. The dividend currently costs about $6 million a year. So $1.5 million a quarter, all right? When we're producing, you can do the maths yourself, it's quite easy, 80,000 ounces, pick a gold price with an all-in sustaining cost of, call it, it's even $800 an ounce. The cash that, and you say tax it at 25%, the cash that comes out of this business, it's north of $30 million a year, $30 to $40 million a year. So in that context, 6 million is barely touching the sides. So we're certainly not over distributing, and we have plenty of capacity to continue to increase the dividend and, as I say, hold money back for strategic purposes.
Okay, so currently the gold price is roughly $1,700 an ounce. Does that mean you're actually throwing off cash at the moment? That means does that make you very profitable?
We've been very profitable for very many quarters. Yes, very profitable. Yeah, I mean, our EBITDA margin is sort of well over 40%.
And where do you expect the gold price to go?
I expect it will go up, actually, but we don't run the business on that basis. So we're very concerned. I expect that with inflationary outlook and geopolitical uncertainty, I think the gold price will at least hold steady and may actually increase. But what we don't want, we spend quite a lot of time marketing in Germany and Switzerland, and you quite often get these Swiss investors who say, "Oh, gold's going to go to $4,000 or $5,000." And actually, that scares the hell out of me. Imagine what the world would be like, what the collateral damage to other businesses if the situation has got to the point where gold goes to that level. So I think we're happy with it where it is. If it wants to go to 2,000, that's fine. But we don't run this business on the basis it's going to go to 2,500.
Okay, very good answer. Michael Whittaker asks, how much of Caledonia's US gold sales must be currently converted into and held in Zim dollars? I've heard there may be changes in the near future. If so, what are the implications for the company? What's the current withholding tax rate? And have there been difficulties recently taking money out of Zimbabwe?
Okay, there's 3 questions there. So currently,
I know he's the devil, isn't he?
It is. Currently, we receive 60% of our revenues in US dollars and 40% in Zim dollars. We use those Zim dollars locally to pay our workers. So we pay our workers on a 60-40 basis. We pay our tax on a 60-40 basis. We pay electricity on a 60-40 basis, and we actually pay a lot of local suppliers on a 100% local currency basis. So far, we've not had difficulty with accumulating money in country, but I think that the lesson we've learned from Zimbabwe since we bought this thing in 2006 is the regime and the regulations keep on changing sort of very quickly, and I'm afraid we've demonstrated over the last sort of decade or so that we're very fleet of foot in terms of reacting to changes as they come. So that kind of moves on to the next question, which is, the next part of the question is, yes, there are proposed changes. In particular, the proposed changes are that we would, when you increase production, you will get 80% of the incremental production in US dollars and 20% in local currency, but still 60-40 for the base level. And to take it further, if you were then to procure a listing on this new exchange, the Victoria Falls Exchange, you would then get 100% of the uplift in US dollars and still get 60% of the base level in local you get 60-40 for still the base level. So if we were to get a VIC4's listing, and frankly I can't see any reason why we wouldn't, that would then move our overall revenue split to 70-30, which is more than comfortable.
Okay. Are you ready for this?
There was one withholding tax.
3 parts.
There was actually 4 parts. Withholding tax, it's not significant. It's about, I think it's 5% for distributions up to the UK. It's 10% for distributions elsewhere. So we route our dividends through the UK. And then the last bit was getting money out. No, we actually don't have difficulty getting money out of the country. We did have difficulty being paid for our gold in the first part of Q1, and I did see a question about that. Yes. And our response to that was simply to stop delivering, which meant that when they started paying us again, we then locked up an awful lot of gold, and they just weren't able to digest. They didn't have the working capital to digest a large gold delivery quickly, which meant at the end of Q1 there was a big receivable that worked its way through the system in April. And since then, the payment mechanism has improved enormously.
Mark, you have a brain the size of a planet. I'm most impressed. So, okay, let's move on to Nathan Peters. Do you think there will be more volume in Caledonia mining shares on AIM if you split your share capital? The current high trading price of £9 to £10 per share probably deters many traders, investors in the market. Do you have a view on that one? Well,
trading on AIM sometimes might be 500 shares a day. Trading this today in New York was 250,000. AIM has got a long way to go, and I can't believe that splitting our shares is going to make the difference. And don't forget, we have to maintain a share price of over $5 so that we don't count as a penny stock in the US. And I'm afraid the main market for trading our shares is now the US by a country mile.
Okay.
So the answer to that, I'm afraid, is no.
Very good. Very good. Do you want to take any more questions from me, or should we wrap it up there, Mark?
No, it's up to you. It's up to you entirely. It's up to you.
Fantastic. I'm interested in my last question then. Would you consider looking at assets outside of Zimbabwe? You've mentioned that Zim is quite a difficult country to operate in. Presumably you mean politically. Would you look at assets outside of Zimbabwe?
Yes, we disclosed that whilst our focus is in Zimbabwe, we will look at assets in niche jurisdictions outside Zimbabwe where we feel we can make a difference, where we feel we can add value to an asset. But we're certainly, and I'm not going to start playing 20 questions of where will you go, but we're very, very cautious about moving into jurisdictions that overstretch the management team. So, you know, if you're buying stuff in the States, it takes 2 nights to get back from the United States to South Africa, which are where our management team is really situated. So within reason, yes, we will, and we do look at things outside Zimbabwe, yeah.
And do you have sufficient expertise in-house to be able to cope with exploration and so on? I know you've got Glen Hume and Connemara North. Are you using local contractors? How does that work? Yeah,
we're using local contractors, but we could easily scale that up. And absolutely, if we get our hands on more assets, we will have to increase our capacity in that area. But you've already spoken to, you know, the company that was on before. I mean, they had a joint venture relationship with some people who've got much bigger muscles than we do. And I guess we could probably do the same thing.
Okay, completely fantastic. Mark Learmonth, thank you so much for joining us. That's the CFO from Caledonia Mining Corporation. Absolutely fascinating. Thank you so much indeed.